So similar to what Andrew did in the previous session, I will be making some introductory remarks. Following from that, I will invite each of our guest speakers to brief us on a specific area or a generic dimension when it comes to the EMP successes, and particularly exploration, of course. And then we will have a Q&A and involve the audience for sure. So what I want to start is by imagine this is the year 2000. We're just recovering from all the mergers, and some are going through. Thousands of employees are being fired. Prices are sub 20, on the rise a little bit. And suddenly, this organization, USGS, comes out, led by my friend here at that time, Dr. Thomas Albrand, and says, you know, we are about to publish a study that says there is about 939 billion barrels of oil and NGLs yet to be discovered, and a similar amount from conventional gas worldwide. Pretty much all countries, all geological provinces were assessed. Dr. Albrand at that time was pretty much, and that study was ignored. He was treated practically insane. And because it was very low price, nobody imagined that we would be doing so much yet to find or discoveries in the next 25, 30 years, when the 90s was such a poor period for exploration success, apart from what we saw in the deep water. Fast forward to today, and in the last 12 years, the record is outstanding. Number one, we have had a cumulative total of conventional oil and gas discoveries that ranges somewhere between 350 to 380 billion barrels of 2P reserves. In the last 5 years alone, possibly some 200 billion have been added, including the massive new finds in Tanzania and Mozambique. I'm excluding the unconventionals, which have been added as part of a portfolio of resources to be discovered thanks to technology and price in the economic portfolio, which could range up to 300 to 400 billion, most of which is gas at the same time. In money terms, the industry is spending about $90 billion per year now in exploration. At that time, it was below 20. And in unconventionals, we're now spending about $50 billion annually, at an increase of 10 times versus 5 years ago. This is an impressive development, pretty much that nobody expected. To the benefit of the study by the USGS, led by Dr. Albrand here, many reserves were discovered in traditional basins and also in emerging basins or new countries. To be fair to you, again, you did not anticipate Mozambique and Tanzania or Israel, but let's review more or less what has happened. We have had massive discoveries, if we may, in the traditional locations where you would expect to find oil and gas, in Russia, in the Caspian, Australia, offshore Australia, Brazil, Angola, and in the North Sea too, especially in the UK and in particularly Norway, where there have been massive finds in mature areas recently. In new places or new basins in new countries, the list is extremely long. Ghana, Uganda, Israel, pre-salt Brazil is definitely considered a massive new place. Angola as well in the pre-salt, Guyana, Mozambique, Kenya, the list goes on. In aggregate, all of these have changed fundamentally the EMP game once more, and in time will change the outlook of the industry. Since 2007, deep water has played a leading role in adding new reserves, particularly gas reserves, across our water depth measures, no longer the ultra deep. We thought we were heading into a period of we just have to go deeper and deeper water, when now we are finding in big finds in not so deep water. By type of hydrocarbon, oil and gas, a lot of both, but primarily gas is fair to say. Who made all of this? It was a range of NOCs, independents, and then some IOCs that were particularly in the sweet spots at that time. But very interesting perspective. Looking ahead, it is said that the next frontier, it's really what is in the game now. Very few people have that crystal ball that tells you where we're going to go next. So what is happening now? In the last 12 months, we have had new groundbreaking access in Angola pre-salt, in China shale gas, more recently in Russia's Arctic, which combine these three places that I just mentioned could add 380 billion barrels of resources in the next, once the wells are drilled and discoveries are made. With this introduction, I'd like to invite our speakers and to give a brief presentation. In order of appearance, we will have first Martin Houston, current Chief Operating Officer of BG Group. Thank you, Martin. The floor is yours. You may address the podium.
Thank you, Ivan, and good afternoon, everybody. Ivan asked me to talk about Brazil, so I'm going to ignore that and talk about something completely different. But I want to focus my remarks on a question I often get asked by the street, which is what makes good exploration companies successful? And I thought I'd try and pin it down onto the 5 things that we think make certainly BG a successful explorer with a pretty robust track record. 15 giant discoveries, including Brazil, in the last 15 years, each of more than 500 million barrels. So clearly a track record that we're very proud of. So how did we get there? But we spend a lot of time thinking about that and making sure that we get the basics right. And we focus on 5 things: people, process, leadership, agility, and technology. And of course, there are plenty of overlaps with the panel we've just listened to. So let's start with people. I mean, clearly, as we heard from, and I think Andy made the point quite definitively, people are absolutely crucial. Without a skill base, we will not be able to develop the resources that we've been able to do. Now, how do we do that? We do it as a mix of on-the-job training, mentoring, and we run a successful graduate development program, which has been running now for 20 years. And if you look at the stickiness or retention rate of our employees, the G&G community is one of the stickiest in our business. And we tend to hold on to geologists, geophysicists for a long period of time. Many have come on to be heads of geology, heads of geophysics in the company. And I myself, by the way, I'm a product of joining as a junior geologist in BG. And our retention rate at the moment is about 80%, which is quite different to the turnover we see in other parts of our business. The second lever or key attribute is process. And we run our exploration process centrally. So we have an in-country exploration manager, but we have, sitting above it all, a group-wide exploration manager responsible for global exploration and indeed managing the budget, which is set annually at the group level. So this takes place in the centre, and we manage it through a single ranked portfolio of prospects in which the quality is assured by a separate team whose job it is to assure, rank, and to risk assess each of those prospects pre-screening and competing for capital on an annual basis. So the learning that we apply is passed up and down the chain and across our businesses. The third of the attributes is leadership. And with just 6,000 people in our company, it doesn't take very long for a good idea to reach the top. Information flows quickly and very effectively in the company. So once proposals have been assessed, promising propositions move very quickly onto the exploration committee, and that in and of itself is chaired by our chief executive with 1 or 2 senior executive colleagues who make decisions extremely quickly and allows us to move very rapidly on things that we see that we like. The fourth lever leads on from leadership, and that is this question of agility. Once we've seen things, we move pretty quickly, one of the trademarks, I would say, of my company. And if you take East Africa, there's a pretty good example where, having seen an opportunity, and clearly we weren't one of the ones in front, I just heard the gentleman in front of me remark earlier on that, what is it called, leading from behind, which I thought was a nice way of thinking about it. But so we followed pretty quickly into Africa, and have since then, of course, been very successful in Tanzania. 6 successive discoveries on the bounce and about 10 TCF of accumulated resource ready to be developed right now. The final of the 5 is technology, and we heard a lot about that, so I won't belabor the points, other than to say, Andrew did mention that he saw Brazil, potentially Rio, as being one of the new global technology centres for the business. And we indeed are building our research centre for global technology in Rio as we speak, a building that's coming up from the ground right this very moment. And that will certainly be a key centre for us. And of course, with the investment that has been generated in R&D as part of the levy that comes out of the pre-salt discoveries in Brazil, I think we're going to see a great deal more with other companies who are successful in the future. So the sixth of the 5 things that I want to talk about is actually the most important one of all to any geologist, and that's luck. And you know, it's always better, I think, to be lucky than good. But if you are good, luck tends to follow. So, Ivan, I'll leave it there. Thank you.
I'd like to introduce now Hal Kibsley, President and Chief Executive Officer of Talisman Energy. Hal.
Thank you. There are so many interesting exploration plays going on in the world today that I thought I should talk about something that's not at the top of the interesting curve. Shale gas in North America. We are at Talisman a significant player in shale gas in 4 or 5 of the different major plays in North America, but 2 of the original ones in Western Canada, I think, have some interesting aspects to them that I'd like to share with you today. And I'm mostly going to talk about shale gas plays, noting that there are some very interesting oil and high liquids content plays in different parts of North America, but I'll talk mostly about the gas. Today, we're going after natural gas in the source rock, and many people call this a resource play. I think that's a phrase that was originally coined by Encana, another company from Calgary. And I don't know whether resource play is the right word. I think it's really just a source play. It's going to where the source rock was, where the gas came from in the first place. And it's interesting, Mitchell Energy is usually credited with starting this whole thing in the Barnett in Texas, but Encana and their 2 predecessor companies, Pan-Canadian and Alberta Energy, deserve credit as well. There are relatively shallow, really lousy reservoir rock plays called the Medicine Hat and Milk River in southern Alberta. They're not small. 10 TCF of ultimate gas will come out of there, and they've been on stream for more than 100 years. The first Medicine Hat gas production occurred when they were attempting to drill water wells, and it started to flow gas. I've been involved in working in those fields for several decades, and we could never figure out where to place the frack, and we could never figure out why one well would produce better than another. And it was really a lot of detailed work by Encana and its predecessor companies that basically figured out the whole section was capable of producing if only we got a big enough frack. And it never turned into the big story that some of the later shale plays did because of its relative shallowness, between 500 and 1,000 meters, and lower pressures, of course, so that impaired the production rates. So Encana led the move on the Canadian front into deeper, thicker, higher pressure zones, tight rocks all across Western Canada, and maybe the 2 most well-known today are the Montney and the Duvernay. These are very, in the case of the Montney, a lot of people would say it's not really a shale. It's a very tight sandstone, but like the shales, we've migrated to using a 0 porosity cutoff when defining the pay. And that's quite a remarkable thing when you think about the way we've characterized reservoirs over the last 50 years. So as long as there's anything above 0 porosity, people tend to think of it as having potential pay. And then the question is, what kind of recovery factor will we get out of it? In the Duvernay, a number of companies have led the play in different ways. And one of the most interesting things is, how long do you drill the horizontal section? And how many fractures do you put into it? And then thirdly, how close can you space these wells together? And I'd say on that particular learning curve, we haven't reached the end of it. We're drilling longer horizontal sections, putting dozens of frac stages into those horizontal sections, and the horizontals are being placed closer and closer together, usually at an angle to take advantage of the stresses in the rock from the nearby Rocky Mountains. So these are the things on the learning curve. It's a very spending-intensive process. no amount of scientific analysis seems to get you there quickly. The route seems to be going out, drilling wells, fracking them, trying this, trying that, and see where we get to. Now, the growth of volume, we talk a lot about how many TCFs are in place, and I've concluded it doesn't matter. It doesn't really matter anymore how many TCFs are in place. It's all a question of production rate. If you want a high production rate, you have to drill a lot of wells, and these wells decline at anywhere between 30 and 50%, not just in the first year, second or third year, and we don't yet know in a lot of these plays how the decline's going to go as you get out into the 5th to the 10th year. But we do know that the bigger the frac relative to the nano-permeability of the shale or the tight rock, the steeper the decline will be. That seems to be a truism. We have learned that when prices are low, drilling rates slow down very quickly, and you would expect production decline in North America to be setting in as we're into our second year of really very low prices. But there's a number of factors that have caused people to keep drilling. One is land holdings. In all the places across North America, we've had to continue to drill to prove up lands and get them on production before literally we lose the leases on some very short 10-year holdings. Liquids are a big motivator for more drilling, and the fact that these wells take some time in places like Pennsylvania to get tied in to the gathering system means that production rates have stayed stubbornly high across North America despite a very, very low price. Now at $3, it's clearly uneconomic for people to do a lot of full-scale development in shale, and a lot of us think that at $6 we're going to see, again, a tremendous surge of activity. So all it would take is 8 or 10 companies drilling aggressively in anticipation of a higher price, and we will in fact see a lower price for a long time. I just share a couple of broad observations on how this fits into the whole picture of supply in North America. In the Montney and the Duvernay, those plays have struggled in Western Canada by being at the very, very upstream end of a long pipeline system. This has always been the burden of Western Canada. It costs a lot to get that gas to market. But it's conceivable that if the Kitimat and Prince Rupert LNG projects go ahead and we're able to start moving Montney gas to Asian markets, and I think in a lot of ways it's going to be easier to move Montney to an Asian market than gas from any other shale play in North America, we could actually reverse that equation and see Montney as one of the higher price points, and that then would apply to what I think is going to be an even larger shale play in Western Canada, the Duvernay. So that would be one big game changer that we would see. Low-cost sources, we know are always best for the producer. Being low on the cost curve is always a good thing. But we also see in North America that when you're high on the cost curve, it's actually creating more economic value for the broader economy. So I just want to close. This is, after all, called the Oil and Money Conference. Having talked about gas, I just wanted to compare it a little bit to oil. So my comparison in North America is if we can substitute 6 BCF a day of dry gas for 1 million barrels a day of imported crude oil, gas at $6 an MCF and oil at $100 a barrel, the very quick numbers are that consumers will save $23 billion a year in the cost of purchasing their energy. And as a result of all that activity and all that spending in North America, we would see another $20 billion of economic benefits. You add that together, and 6 BCF a day substituting for 1 million barrels a day of imported oil, that's roughly a $40 billion impact to the North American economy. I hope that President Obama is listening. Thank you.
Thank you very much. Thank you very much. Tim Dodson, Executive Vice President of Exploration, Statoil. Welcome, Tim.
Thank you, Ivan. Good afternoon, everyone. I'm going to stay close to home. That for me is Norway and close to here. E&P successes, they're obviously something that everyone is aiming for in our industry, and I think it's fair to say over the last couple of years then Statoil have had their fair share of exploration successes at least. I'd like to focus on the exploration successes we've had in Norway. Of course, we've had major successes outside of Norway this year, both in Brazil and more recently in Tanzania. And try to sort of go into a little bit of detail behind the Skrugard, the Havis, and Johan Sverdrup discoveries to try and create kind of a feeling for what they are really about and how they came about. I think, so the perspective which Ivan drew up here, just 10, 15 years ago or something like this, it was the same in Norway, basically. Sunset industry, this kind of thing, extremely low exploration level. And I think, for most people, they were looking on the Norwegian shelf as a declining basin with a very limited upside potential. Everyone thought that all big oil had already been found, and that ILX was the only business case to aim for. And many chose to sort of reduce their activities, and many even stopped exploring altogether. Of course, I think for Statoil it's quite different. It is our home base, and we couldn't just give up exploring, but we also took our exploration activity down quite substantially at the back end of the 90s and into this millennium. But I think what we had and what we still have, we had this 40 years of experience on the shelf, good regional understanding, the subsurface, which was telling there's much more to be found. I left exploration temporarily in 1999. I came back in 2004 and was asked to head up our efforts in Norway. And I was intrigued, as I was in 99, but the same things in 2004, by a number of elements. And those elements were, you can really sort of equivalent them to missing pieces of the jigsaw puzzle. What I recognize on the Norwegian shelf and what I recognize still, it's a number of highly prolific basins where there's generated and migrated much more oil and gas than we still have discovered. A highly prolific place, petroleum provinces are places you want to be, and they are the core of the core, and I think sometimes we actually forget that. We focus on all the other stuff, technologies, all these kind of things, but if you're not in the right place, then you're not going to find a lot of oil and gas, to be quite honest. The jury was out up until March last year, 1st of April, I think it was. We announced the Skrugard discovery in the Barents Sea. It's the biggest, not the biggest by far, oil discovery in the Barents Sea. Of course, there's the Goliath discovery operated by Eni. The Skrugard discovery is somewhere between 200 and 300 million barrels. But I think it's important to point out that in that actual block, then the first well was drilled in the late 80s. In fact, there were two previous wells. The other one was drilled in the 90s. One down dip and one up dip, actually testing different fault blocks in those. The one was blown down dip, too much pressure. The other one hadn't seen any oil and gas. So the secret here was actually sort of come up with a different kind of concept. We knew the basin was working. We knew it was generating oil, but where was it trapped? And it was actually trapped on the middle terrace. Of course, our confidence was very low, so before we go on that, and I think that was the same for the rest of the industry. And it wasn't until we got the 3D data covering these structures, and not just getting the 3D data, but the way we managed to process those and then to image what we now recognize quite easily as two flat events representing the gas oil and the oil water contacts on Skrugard, then of course it becomes obvious to everyone. I think even at the point of drilling of the Skrugard, we were still had a low level of confidence with regards to upside prospectivity. But once we understood that, once we understood how to sort of produce the seismic image which we were looking for, we started to uncover new opportunities. So earlier this year, we drilled just 8 kilometers away on a separate structure along the same trend and proved up the Havis discovery, another 200 between 200 and 300 million barrels, and these will be co-developed. So what we didn't see just 1 year ago, we now see quite evidently then another clear indications of double flat spots on this. Going forward, we will drill another 4 prospects in this license, all with good indications of hydrocarbons on the seismic. So I think These two discoveries have definitely changed the perception of the industry, of the exploration potential, in at least this part of the Barents Sea. And have shown that technology is increasingly important as that oil and gas becomes more and more difficult to see. Of course, in between time, we drilled in the North Sea, more specifically in the Utsira High, and we improved up what we called the oldest discovery then, what is now part of the Johan Sverdrup discovery. And as you probably recall, Lundin made their discovery in 2010 on a structure called Avaldsnes, which was actually a four-way closure within what we now recognize as Johan Sverdrup. The first well in this license was drilled in 1969, 42 years previous to the discovery of Johan Sverdrup. Johan Sverdrup was the biggest oil discovery made in 2011, not just according to ourselves, but those who analyze this. How big it is, I don't know, but we have some big oil fields in Norway, and the way we look at it at the moment is probably the 5th largest oil discovery ever, and the biggest discovery made on the Norwegian shelf since the late 70s. But it took 30 years of exploration, or 40 years of exploration, to actually find something of that size again. So in this case, you might be wondering, so what was it really about? And I would argue that it's not about technology. Of course, we have 3D seismic over this, but the reservoir is for the most below seismic resolution. It's underlain by basement, so we get a lot of ringing of the basement, and it's very difficult to depict the reservoir interval. So what was this about? This was really about putting on a new pair of glasses. It was about having an open mind, and it was actually about what I call conceptual thinking. And when I talk about sort of conceptualizing in exploration, that for me is really the third wave of exploration. So how do I think about that? Well, the first wave for me was what we already call easy oil. It was kind of the big bumps, which we were able to recognize on 2D seismic. Once we've done most of that, we need to develop new technologies in order to sort of identify more subtle traps. We had the 3D evolution at the end of the 80s into the 90s, and what wasn't obvious on the 2D became obvious on the 3D, and we started to exploit those. But the wave 3 is something different, and I would argue that wave 3 is what's really only in the mind of geologists and can't readily be seen on 2D or 3D. It's actually about trap conceptualization. It's about traps that you still can't readily see. And I'm pretty sure that 90% of you in this room, if I gave you a 3D seismic line traversing the Johan Sverdrup discovery, you would still not be able to point to the reservoir. That's probably a pretty bold statement, but I think it's actually true. I've tested it on my own organization. I think all of these examples, all these 3 examples, they show that the NCS, it continues to be a highly prolific petroleum province. So that is my sort of starting point for this. Our recent successes have helped to revitalize the activity in Norway. It's not just us. And I expect the competition for acreage in the upcoming concession round in the Barents Sea to be extremely, extremely tough. An interesting statistic in this perspective, and one I'd like to leave you, is that 61% of the Norwegian shelf is believed to contain hydrocarbon potential. Of that, only 25% is open for petroleum activities, and just 6% is currently licensed. So, in order to untap the remaining potential of this highly prolific petroleum province going forward, we will need technology, such as one we used on Skrugard, but we need perseverance, and I think Martin's also talked to that as an important element. And but we will need conceptual, innovative conceptual thinking, such as we have on Sverdrup. So skilled people matter, and not just any people. I think any successful exploration company is highly dependent on a very few key individuals, and they are absolutely priceless to our part of the business. In Statoil, we're committed to continue exploring, finding and exploiting to full the hydrocarbons on the Norwegian shelf. And when nobody believed more big oil was going to be found in Norway, I think we demonstrated together with Lundin that the opposite was possible. The challenge, of course, now, and it's no mean challenge, to repeat that these recent successes, both in Norway and globally. Thank you.
Thank you very much, Tim. And now I have the pleasure of introducing Alexander Korsek. Mr. Korsek, thank you for joining us. He's president and chairman of the management of the board of JSOS Bashneft from Russia. Thank you very much for being with us today.
Ivan, thank you very much. Ladies and gentlemen, it may look like a coincidence that I'm participating in this particular panel, because Bashneft is spending just a fraction of its capex on exploration. But on the other hand, it can be a vision of Ivan, who understood that market forces are shaping the strategy in a way that probably exploration will become the major direction of our development. I'll try to explain later why. But before that, a couple of words about Bashneft. Probably not everybody in this hall is aware the company with this name exists in Russia. Nevertheless, with a production of 300,000 barrels per day and refining volume of 400,000, it became suddenly number 3 among Russian privately owned company. It was number 4. After TNK-BP deal was announced, it became number 3. So we're proud of that. We're moving up in hierarchy. In order to understand why we are moving towards exploration, probably I should tell a couple of words about the story of Bashneft. The company was acquired by current shareholder in 2009. Since that time, market value of the company grew from $4 billion to $12 billion. EBITDA grew from 1.1 to something like 3.2. And what is probably the most important for this discussion, production grew from 11.6 million tons per year to 15.3 in 3 years' time. And what should be taken into account? We have 168 fields. Some of them are producing for 80 years, some of them. Some for 50, 60, 70, etc. Depletion rate is very high. Water cut is about 91%. 13 billion barrels of crude were extracted from these 168 fields. You can imagine the number and what was left for us. Well, we managed to do the job. If the board of directors asked me what is behind the job, I would have said fantastic management. Frankly, it's just a combination of pure luck and normal management. There are still some places in Russia and probably somewhere else in the world where application of proper technologies, not state-of-the-art technologies, not any miracles, but of proper technologies, proper business practices can bring these kind of results. I'm not sure that there are too many places of that type, but there are still some of them. Now, what to do next? We increased production to 15.3. There is a limit with depletion rate, which is nearing 90%, with water cut 91%. 80 years of production, what to do next? Well, there was a price. We managed to acquire famous Treps and Titov fields in Nenets Autonomous Region of Russia. Analysts already put all the numbers in their forecast, and it seems that these fields are already produced, at least on paper. What to do next? We were trying to ensure the growth of the company by buying existing assets in Russia. No chance, no chance. It's almost impossible to buy good reserves or to buy existing production because the prices are several times higher than NPVs which can be produced in these particular assets. So we were forced to look at exploration, and that's what we're doing right now. In fact, we decided to concentrate our efforts in 2 regions. One region is our old producing region of Bashkiria with 80 years of production, but geologists, and I would fully support your idea that success of the company in exploration fully depends on very few individuals. And we managed to get these individuals, collecting them from different companies, in fact, stealing them from different companies. And this team of geologists is pretty sure that we'll be able to discover very significant reserves in our current region of operations in Bashkiria. taking into account that we have all the infrastructure in place, workforce is in place, everything is in place, it would be very cheap exploration, very cheap exploration. Another area is Nenes Autonomous Region where the Treps and Tito fields are located. Again, we are looking for good exploration areas, and geologists advised that we should go there. We met a very strong competition of very sizable companies like Surgutneftegaz, one of the largest producers in Russia, like Lukoil, one of the largest producers not in Russia but in the world as well. And the last but not the least, Shell. Shell, very simple. We managed to get these fields. We paid high price. Now our estimates show that NPVs produced from these fields, if we are lucky, and if the expectations of geologists will come true, NPVs will be several times higher than the money which we paid for these fields. In fact, we are pretty preoccupied with these directions I've just described. We do not believe much that we'll be able to buy existing assets in Russia. The prices are too high. We have almost utilized the potential of all Bashkirian fields. We know how to utilize the potential of Treps and Tito fields. So exploration in Bashkiria and in Nenes Autonomous regions are going to be major directions of company development for the nearest future. Whether we have state-of-the-art technologies? No, we do not have state-of-the-art technologies. I believe we have the same technologies as all other companies have, just normal technologies. They're all the same. Probably there are some fantastic things some of the oil companies produced for themselves. But everything else is acquired from the service providers, and the success of the exploration, to my mind, depends on what is the vision of the geologists, what is the track record of geologists, what have they seen, what have they done in their life, and I hope very much we'll be able to continue the growth of the company moving in this direction. Thank you very much.